So we are live for the very first time on this channel. I'm incredibly excited. I just wanted to actually go live to wrap up some of my ideas here in 2022 and before we head into 2023. For all those who care to listen, of course, there's always so much going on, not only just at the end of the year, but on a week-to-week basis. And I think as long as we have these macroeconomic backdrops in mind, we are actually able to make better, wiser, more informed investment decisions. So I'm pretty excited, guys, because again, this is my very first time going live on the channel. I was actually just doing a Tip Ranks webinar, and I decided, you know what, why not pop on to YouTube, go live, just share some of my thoughts before we actually head into the new year, 2023. So what an exciting time, guys, because yes, it is the end of the year. I think there was a lot of anticipation for us to go into a Santa Claus rally, which I no longer foresee coming. And I want to actually start there because as of a couple of weeks ago, I was someone who was sharing that I think we will be in a Santa Claus rally come the end of the year. I think we're going to end 2022 in the green, maybe move into 2023 in the green, and then be hit by earnings, the first earnings season of 2023, and we'll see more volatility in red. But since Jerome Powell and the Federal Reserve have actually come out to speak, I have since changed my mind and my stance. I wanted to go over even in that regard why I changed my positioning. And I think it's most important for all of us investors, guys, to really focus in on the Federal Reserve, what they're saying, and even how they're saying it. Go one step further and focus in on what exactly CEOs are saying across the board. And then on top of that, we had Janet Yellen, the the Secretary of Treasury, guys, come out last week on 60 Minutes on an interview and share with us basically her 2 cents in regards to a recession to come in 2023. For all of you who are brand new to the channel, guys, my name is Ari. This is my channel. It's formerly known as Blue Lion Finance. Guys, I'm a little under the weather today, but I'm going to rock and roll with it because why not? It's the end of the year. That's not an excuse to not jump on YouTube and dish out some thoughts for all of you guys. If I'm pumping out this video and it helps someone make a wiser investment decision or prepare for 2023, then my job here is done. So guys, where exactly do I stand right now with the market in regards to how to invest moving into 2023? I'll keep it short, sweet, and to the point, guys. 3 pieces of criteria to keep in mind. First of all, everybody should be looking into companies that are well capitalized. Second of all, everybody should be looking into companies with very strong leadership. And third, everybody needs to be investing into companies that have very strong brand names. Those pieces of criteria as you're investing for 2023, I think are important because I do foresee a recession coming. I believe that it's just inevitable that, like we're going to hit a recession, and that's what we should be preparing for. And the reason why I say that, guys, is because the yield curve is still inverted. A situation from how I see it is actually getting worse. We need to take that into consideration. Now, while inflation has been coming down, 3 months back was at 7.7, then it dropped down to 7.3%, and then it dropped to 7.1%. All great signs. And I'd like to say that these are small battles in a long-term war. We know that the Federal Reserve wants to get inflation all the way back down to 2%, 2 to 3% inflation. That's going to take a moment or a really long moment. And so I share that with all of you because you can't just jump into growth stocks, I think, right away. And I think in knowing that, you might want to position yourselves well for a high inflationary environment and a high interest rate environment. So what's been happening as interest rates are rising, we get the headlines, the big headlines coming out where tech stocks or rather tech companies are laying their employees off. Now, we've been seeing that across the board. That shouldn't be new news, but it's something that we should be watching because in a high interest rate environment, guys, these high growth stocks, the tech stocks, they're going to be hit the hardest. So certainly keep that in mind as we're heading into the new year. Now, on top of that, guys, watch and listen in to the Federal Reserve. Not only what they're saying, but how they're saying it. The tone of the Federal Reserve is everything. And it's my belief that the Federal Reserve is closely watching the labor market. They're watching the labor market. because between you and me and anybody out there listening to this, they want higher numbers worth of unemployment. Guys, I'm not necessarily here to share with you that Jerome Powell is team you and me. Let's get that low inflationary number. Absolutely not, guys. They want to pump unemployment up to about 5%. And so keeping that in mind, guys, right now unemployment is at 3.7%, just gives more ammo to the Federal Reserve to keep doing exactly what they're doing, which is attacking inflation. So the other week, as we had that inflationary report, the CPI report come out, and we had that victory of 7.1% inflation, the market certainly rallied, and that was great. About a day later, the Federal Reserve came out. I believe it was already baked in that we would get a 50 basis point rate hike. That's exactly what we saw, and it was expected. Not much was changed up until the moment that Jerome Powell actually came out, and he shared with us that the Fed will be pretty aggressive in terms of fighting inflation, and the market then continued to slide. Now we're still sliding today, and we only have literally about a handful of trading days really left in the year of 2022. So now my new outlook moving into 2023 is this. Well, we're going to ebb and flow just as we were a couple of months back, and we're going to ebb and flow a couple of months into 2023. Now, guys, I say that because we're not going to get any real news coming out until midway through January when we get the next CPI report, and then to the end of January when the Federal Reserve comes out and shares again their thoughts about how they're going to go about fighting inflation. And those are really market movers when we get a lot of volatility. Now, across the board, guys, we've had CEOs come out and share with us that there's going to be a recession. That's literally anyone from Jamie Dimon to David Solomon. Jamie Dimon, CEO of JP Morgan Chase. I am sure he's got more insights and information at his fingertips than I do, and many of us YouTubers do. So when he speaks, I certainly listen. Then we had David Solomon come out and share with us that there's going to be a recession. And on top of that, we had a couple of CEOs that I took a listening to. And guys, those CEOs were Doug McMillon over at Walmart, and then we had Lance Fritz over at Union Pacific. And these guys I listen to closely as well because they give me a lot of insight as to where exactly the consumer is, the strength of the consumer, which is incredibly important heading into the new year. So on top of all of that, guys, almost the icing on the cake was Janet Yellen's 60-minute interview with Norah O'Donnell. And I didn't watch the whole interview, but I did catch, snippets, I think, of the pieces that were most important for us investors. And Norah O'Donnell asked Janet Yellen if she basically shared that, the consumer is pressed. We're looking to penny pinch and cut where we can to save. And, for the average investor, for the average person out there who's worried about a recession to come, should we be worried about a recession? Janet Yellen's response was the most political thing I have ever seen and listened to in my entire life. And if you're not reading between the lines, guys, then you need to open up your ears, because Janet Yellen shared, well, there's always a risk of a recession. Not necessarily true. There's not always a risk of a recession, right? But that's like political talk for get ready. There might be a recession. I just can't say that yet because I don't want to scare the American people. Now, that's my 2 cents really of where everything stands on an economic backdrop front. I'm pretty confident that we've already had a recession. Thank you so much, Les, for the comment. We actually have. I mean, technically speaking, we have had a recession. What defines a recession is 2 negative quarters of GDP, and we've had that. Now, what I think is interesting in terms of why we really haven't been throwing that R word around, it actually is, from my end, more of a political answer. And we notice the White House has just been incredibly careful about how they throw that word around, recession. I think there's a lot of politics behind throwing that word around, and I don't think we want to cause mass hysteria. But that's my take. There's a big political push, media outlet to media outlet. But I'd like to see that word be thrown around much more, because when you have all these CEOs talking about a recession, and when you even have Janet Yellen talking about a recession to some extent, give us the truth. I think this is what the people need to hear. And in order for the people, the average investor, you and I and everybody else out there, to best prepare for the new year, that's exactly what we need to hear, is really planning for the best, but being prepared for the worst. And when we neglect to actually share that R word, recession, I think we're misleading people. And so that's why I'm not afraid to jump on here and share with everybody that I do think there's a mild recession that will hit. Now, to go back, guys, to the recent earnings that came out this week, pretty impressively, Nike crossed that quarterly finish line. They exceeded analyst expectations, and the stock soared, I think, by like 7 to 12%, somewhere in that window. And then FedEx actually had earnings as well the other day that they came out, and they actually exceeded analyst expectations as well, which is great to see. But newsflash for everybody out there: earnings, guys, show us how the company's been performing over the last quarter, right? And the stock market is a forward-thinking, forward-moving vehicle. So as exciting as earnings can be, I think it's important for us to literally be forward-looking and ask ourselves some bigger questions. How will Nike perform should a recession hit? How will FedEx perform should a recession hit? And I think the commentary by the FedEx's CEO is pretty important, and that he shared that they were actually looking to cut costs anywhere that they can. So it's important to listen for those little messages, guys. And I also wanted to talk briefly about Tesla, because there's a lot of Tesla talk going on out there. And I'm going to be pretty frank with you guys. This is my first live stream. I don't even know if I can share my screen with everybody. But what I wanted to do was show you all through essentially what I was taking a look at earlier today, which was the amount of shares that Elon Musk was selling and has been selling as recent as 7 days ago. Now, in the webinar that I gave at TipRanks, I really honed in on this because TipRanks has a tool that we can use as investors. And fair disclosure to everybody out there, guys, I do work at TipRanks. So I'm throwing that out there. I'm not just pumping this video out there and say, go buy TipRanks. I literally work there. I do their webinars. I do their economic outlooks and whatnot. And regardless, I was taking a look at one of the tools, insider trading, today, and I was scrolling through, and I see that Elon Musk, of course, is trending. When isn't he? And I see that Tesla stock is trending, and I may get a lot of heat for making the following comments, but here we go. Here goes nothing when it comes to Tesla. Guys, if you're invested in Tesla, I think at the very get-go, you're an Elon Musk fan, really. And I think even right now, everything that's been happening with Elon Musk is just unfortunate, in my opinion, the way he's been utilizing Twitter. And, I think with great power comes great responsibility. And unfortunately, I'm just seeing a leader that I'm not essentially a big fan of standing behind at this point, the way he's been essentially leading Twitter and Tesla. And I think it's unfortunate. And that's just my 2 cents. That's not to say I've sold out of my Tesla position. I do have Tesla shares within my portfolio. I want to make that abundantly clear. Tesla is an EV leader. They are the EV leader. And of course, there's been a lot of trouble with the stock itself. But what I want to talk about on this front when it comes to Tesla and Elon Musk is actually just how many shares Elon Musk has been selling. Like I said, first live stream here with everybody, so I forgive me, I don't know how to share the screen, but I'm just going to show you guys through, by way of sharing it with you on my end, what I'm seeing when I take a look at tipranks.com, insider trading Tesla, and I head over to their insider trading, and I'm looking informative sells. Now, guys, informative sells are when an actual insider is using their own funds, right, their own money to make that decision and execute the buy or trade, right? And so what I'm looking at now on my screen is, as of 7 days ago, Elon Musk selling estimated value of shares, guys, over, what do we have here? 3.5 billion, guys. And then last month, we have 1, 2, 3, guys, 3 sales. Then 4 months ago, we have 1, 2, 3, 4, 5, 6. That list goes on. But like across the board, Elon Musk has been selling his Tesla shares. What that says to me, guys, is not necessarily that Tesla is a sell right now. I'm not here to alarm anybody. If you have Tesla shares, fair disclosure, guys, I have Tesla shares. I'm not selling, but it's just interesting to look at. On the other hand, we have hedge funds that have been buying into Tesla at this point in time. So I'm only throwing this out there for everybody to literally look at your positions, look at what their leadership is doing. Now, Elon Musk has been selling his shares And that should be alarming for all of us, because the question comes, how much lower can Tesla go? And that's up for you to decide. I'm not going to tell you guys when to sell or how to buy and sell stocks. I want everybody to do their own due diligence. But for me, it's not a good sign when the top insider, literally like the man in charge, Elon Musk himself, has just been offloading shares. This is like Mark Zuckerberg selling all of his shares of Meta, not selling all of them, but selling a lot of them before, well, now we have Meta at the stock share price that it is. So I'm just putting all this on your radar, guys. And I want to wrap up because I do have a holiday party to get to with, again, what I foresee coming here now moving forward into 2023. And that is, guys, that mild recession. But how do we prepare for it is looking into companies that are, number one, first and foremost, well capitalized companies that can make it through a recession, that can make it through volatility. That is exactly why I'm a dividend investor, because I don't have to worry about my stocks within my portfolio. They're deep value stocks. At least I find them to be deep value stocks. They're going to pay me out through the good times, through the thick and thin, right? Those bad times as well. And on top of that, guys, I'm invested for the long period, right? 5 years, 10 years plus. And so this just gives me confidence that should a recession hit, guys, I'm going to be doubling down, buying more shares in my core position. I will let everybody know that I did buy more shares of Apple the other day when Apple's stock share price slid to around $131. I know that PE ratio is still above 20, but I will share with everybody, I'm highly doubtful that Apple's going to fall, to 100 or around 100. And I think there are some analysts out there who are sharing that it may. I'm in disbelief. I think Apple is a strong value company, and I think it will ultimately prevail. I want to make it 20% worth of my portfolio. As of right now, it's about 18% of my portfolio, just to give you some perspective. And guys, I've also been waiting for Johnson & Johnson to literally slide because I cannot wait to get that position up to 100 shares. And Realty Income is a stock that I've been watching, of course, as well. Now, guys, these are just 3 stocks that I've been really watching and hoping that they slide down for me to double down on them into 2023. Overall, right now, my portfolio has 29 total holdings within it, and I am looking to trim my entire portfolio down. I'm looking to do that because I want to take more of a Bill Ackman approach. And in that approach, guys, I'm looking to get the best 10 to 12 positions that I possibly can find, really double down on them. And I'm not going to be here to share with you that you need a dividend investment portfolio of 50 holdings. I think that's personally a little bit too much. You can't have your eyes on all 50 stocks, at all times. And so my goal here is just to trim my portfolio down in 2023, get myself to the best 10 to 12 holdings within my portfolio. And of course, those will be dividend stocks. Now, there are right now 3 stocks that are not dividend paying companies in my portfolio. I will honestly share those stocks with you here. That's Tesla, Amazon, and Google. Google, I see as a long-term play. Targeted advertising will come back, no doubt, in my opinion. And I think it's at a great price right now. I think it even may fall more. So I will pick up potentially more shares worth of Google. Hands off right now of Amazon. And then, of course, I have Tesla, which I am going to remain in a hold position with Tesla and just hold on to it. I do believe it's the EV leader. I bought into Tesla, I think, 2.5, 3 years ago. And so as of right now, I'm still up on Tesla. And despite everything that's going on, despite Musk selling the shares, the comeback, I think, could be around the corner. And there's always something, I think, interesting when Elon Musk is buying and selling his stocks. There's always something happening behind the scenes. I do see some commentary coming in. I'm just going to try to get to some of these as well. Why do you think today's rally is so huge? Due to Nike or FedEx's earnings? That came in from Michael. Michael, thank you so much, man, for joining me here live. I think when it comes to both Nike and FedEx, why that rally was so big is I think the market overall, when we get new news, and when that's typically news when there's like a vacuum, right, of space, aka no news. Any positive pieces of news that come our way, the market always runs with hope and optimism. And it's as simple as this, in my opinion. We as humans, we make up the market. And we are, unfortunately, we are not logical creatures, guys. We are emotional creatures. And so therefore we see good news, we jump on it, and we buy and sell or whatever may have you like there's no tomorrow. Now, through investing, I've learned how patience plays a massive role. And that's not to say, time the market. That's not at all what I do. I think it's important to dollar cost average as an investor. However, it is also crucially important to throw more money into the market during periods of high volatility, right? When there's a lot of fear in the streets. Hence, Warren Buffett always sharing that you should be greedy when the market is fearful and fearful when the market is greedy. And so that is always in the back of my head, where I'm always going to be consistently dollar cost averaging into an index fund. However, when I'm throwing thousands of dollars into the market, guys, that's usually when there's more volatility, like we've been seeing rather recently, aka the other day. Apple slid. I bought more shares worth of Apple. I'm seeing some more comments come in from Les here. I think the central bank governors around the world don't want to call it a recession to avoid negative consequences of calling it out. Recessions are identified in hindsight for this reason. Yes, I absolutely agree, Les. I could not agree with you more. I think it's also very, very political. And, real leadership, in my opinion, can stand in front of whomever and share the truth at what we're looking at here. And I don't think that there's real leadership right now. And that's my opinion. But I don't think we have real leadership to come out and share with us that everybody should be, bracing for impact. And I think the more political talk that we have, the worse off it is for the average Joe like me and all of you out there, because I want clarity. I want transparency. And when I have Janet Yellen saying, well, there's always a risk of a recession, after she was just asked, in her opinion, is a recession going to come our way? I think that's an opportunity for a politician to be pretty honest and say, hey, in my opinion, yes. And that would be a very interesting answer if she did answer that way, obviously, given she has all the data at her fingertips that we don't. And that's just how I look at that. Les is sharing, I'm pretty confident that we've already had a recession, and we have. Again, a recession is defined as 2 negative quarters worth of GDP. We've technically had 2 negative quarters, and we didn't even call it a recession then. So be careful who you're listening to. Define, right, by the definition, we've had a recession, but the impact of the recession, I don't think, has actually hit. I think it's been hitting the tech sector, if anything, with the layoffs that have been happening. I think more layoffs will be coming down the pipe into 2023 when the recession is a little bit more in our face. I got Ryan Williams in the house, Mr. Ari Gold. Good to see my dude, Ryan. This is my first time doing a live stream, so I'm pretty excited. I tried to share my screen earlier to show some things going on, and I'm also a little bit under the weather. I just decided actually to jump on here, given that Ryan Williams has certainly inspired me to do some live streams, likewise with some other guys out there on YouTube. But I just wanted to get out there and share my thoughts on what was going on in the market as I saw it today, because I see a lot of trending things going on social media, from Tesla to FedEx and Nike earnings, guys. Now, I also, guys, will share with you that a video will be coming out on Sunday this week, and it's going to talk about the dividend stocks that we can prep ourselves with for 2023. So I'm pretty excited about that. Ryan, I hope you feel better, brother. I had some people in the office today who told me to go home, take a rest day. I said, absolutely not. I had a Tip Ranks webinar to help out, our community over at Tip Ranks. And I literally said, absolutely not. I'm not going home. I'm here for the investors who are out there. And then I literally got home not too long ago, and I said, you know what? There's a lot going on in the market to close out 2022, and I can't let that be. So I'll jump on here as well. Guys, we are coming up on 25 minutes. I'm pretty sick, and I'm also got to get ready for a holiday party, but I'm sure I'll be live again. I think Ryan, myself, and a couple other YouTubers, big dividend YouTubers out there, will do a collaborative video together before the year's end. So I'd love to have each and every one of you guys there. I'll send a message out in the community. And if I don't get on here live before Christmas, Merry Christmas to everybody celebrating, and Happy Hanukkah to those of you who are already underway in celebration. Happy New Year to come. Much love to everybody out there. Happy investing. Guys, one last thought here. Get focused on companies that are going to prevail in a recession. Those companies are the companies that have strong brand names, strong leadership, and that are incredibly well capitalized. Guys, I'll see you all in the next live stream. And of course, I look forward to delivering through on my video come Sunday. Thank you, everybody, and I'll catch you in the next one.